Oh, good evening, folks. Welcome back to the channel. So finally, an AMC video. This channel's been running almost a year, and I've never done an AMC video, but they came up with one of the more, I think, ludicrous ideas earlier this month, and I'm going to show how the stock has reacted to it and cover how the stock's done over the past 2 years, because this has been a big meme stock over the last 2 years, and we'll cover that. But first, let's talk about this move that they made with the AMC APES. So I had to spend some time before I started recording this video to kind of wrap my head around this. So what they've done, basically, they issued a preferred share class, and they're calling it APE. I mean, that's the acronym, basically. AMC Preferred Equity. Get it? APE, APE. Haha. So that's what that is. So I was going over this article here. AMC finds a loophole with its new preferred APE share class, but there are a few catches for investors. So when meme stock traders began to make waves in the market last year, they championed being unpredictable and irrational with their targets of enthusiasm, so on and so forth. But they're now embracing this meme phenomenon by issuing the AMC preferred equity share class, which is supposed to have started at like $6 per share. It was distributed to shareholders as a dividend last week and began trading on the market on Monday, closing at $6 per share. This article says it's a cash grab. In 2021, the stock soared after garnering enthusiasm, and we're going to cover all of this in this video today. So let's jump to the actual stock performance. So this is AMC stock, and this, along with GameStop last year, these were like the first two big meme stocks. So if you look at the Yahoo Finance output here for AMC, it's strange because it only goes back to December 2013, which, I mean, the company's, as far as I know, has been publicly traded much longer than that. So I was actually trying to look that up before I started this, but I really wanted to get this out. But that is strange. That's something that I'll have to look into further. I found, like, I mean, in the 80s, they were publicly traded. So I'll do more research on that. It probably discuss that in another video. But the 52-week range on this stock is $9.23, 52-week low, and almost $53 for the 52-week high. So that's a significant range. And I mean, you can see it shot up and then collapsed, basically. Earnings per share are negative, red flag number one. Beta, which I don't talk about much, beta is the risk profile of the stock relative to the market and the peer group. This is a 1.67, so this is almost doubly as risky, according to I believe the CAPM model. How's that for some financial nerdity there? Market cap almost 5 billion. Very high trading volume, because this is like I said, this is a meme stock. This gets traded. I mean, look at the volume here. So bearish pattern indicated, 1 year target estimate $11. And this has really, so I have this view back to 2013. If I do a 5 year view, the stock kind of hovered around the same price range. It started kind of tanking when the pandemic started, dropped all the way down to $3.16. And then its first run up, which was tiny in comparison to the big one that happened later in 2021. So towards the end of 2020, the stock bottomed out at like $2.12 a share, and then started randomly getting bid up to $13.26 per share. So that was a nice like almost 6x or over 6x gain there. But then the stock, after the first quarter of 2021, when everybody got their stimmy checks, what did retail investors do? They put that money into the stock market. So we started having these crazy run-ups. And then you had the whole short squeeze phase where hedge funds were getting ready to take certain companies like GameStop possibly into bankruptcy. So it's like the retail investors kind of like banded together and in a way help save the companies. And on paper, that's a really nice idea, but it doesn't always work out in practice, because I think the bigger firms and the hedge funds kind of have more power in the market. It's kind of like workers versus managers in the economy. Like it's like a tug of war, but eventually, the management, unfortunately, is probably going to have the control. But workers kind of try their best, just like retail investors. It's kind of the same concept. But anyway, so the second big run up after that second or third round of stimulus checks in early 2021, the stock went from 1003 all the way to 56.68, and that's close to the 52-week high. Um, Even though that was June of 2021, and then it started coming back down, and then obviously in 2022, I mean, most everything's been down, and I mean, we were starting to recover, but now we're reverting back to dropping again. So not sure what that short-lived 5-week recovery was all about. I mean, I actually thought we were back in a bull market because most of the indexes popped up, between 15 and 20%. But I can tell you certainly just from my firsthand, just what I'm able to do as far as firsthand research, just walking into a store and stuff like that. Inflation has not gotten any better at all. In fact, I was just in Costco yesterday, and I was quite angry that because I only go in there maybe like every 1 or 2 months and stock up on stuff, but I was very mad to see that prices have actually gone higher than they were the last time I was there. And even though gas is falling and stuff like that, the prices are it's to the point like Costco's not even a deal anymore. I may just let my membership lapse. There's a lot of stuff I just crossed off the list. I'm like, at this price, I'm just not going to buy it. I'm stubborn like that. I can just cross stuff out. Like, all right, don't need this, don't need that. It just gets, you get a certain price point in your head. Some people may laugh at that, but you get a certain like price point in your head for products, and then when the price exceeds that, you just can't justify it. I mean, unless it's an absolute necessity, you say to yourself, at least I do, I say I'm not going to pay that for that. I'll just do without it. I'm not going to pay this price for this. It's insane. And even with energy prices falling, the prices of stuff really aren't coming down. So that's the end of that rant. But anyway, let's go to the earnings of AMC. We already looked at we saw the EPS was negative, but they actually beat earnings third quarter 2021. They met earnings in the fourth quarter. In those last 2 quarters of the previous year, that's when movie theaters really started opening back up. More people started coming back. You notice that streaming services ended their, straight to streaming movies while they were in theaters. I mean, that kind of ended like that. I loved it because I thought it was awesome to be able to watch something at home while it was in theaters. Because my, frugal mind, I just like I'm kind of in heaven when something like that happens because I have a great TV as it is, and like yes, I don't have to pay $15 to see this. I'm already paying whatever $10 a month for HBO Max or whatever, and getting to watch these movies. It was great, but too good to last. So and then quarter 1 of this year, they missed earnings, and then now this is really strange. If you look at the projections here, which is the white circle with the blue line around it, the projections are very like up and down. Look at this. So quarter 1 they revised it like way down and they missed it anyway, and then after the miss they revised it way up, and then they missed it again, but not by much. And that's really strange because if I was predicting this, like if you looked at the screen right now and just put your hand over that side of earnings there, like I would have predicted, because they missed, I would have predicted that the prediction, how about that? I'm predicting the prediction, tongue twister. But I would have predicted that the prediction would have come in way lower, and then where the earnings actually came in, they would have exceeded the projection, and then that could have been even like an earnings blast trade. So I would have been completely wrong with that. But we haven't gotten the third quarter yet. That's November 7th coming out. And you notice, by the way, all these numbers are negative. So the only question is when the actuals come in is how negative is it going to be, or will it be flat at like 0? So, but yeah, that's kind of strange there. So back to this thing. Now that I kind of give you a history lesson on AMC, which I didn't intend to do, but I tend to ramble. So let's go to the point of this video. So when AMC decided to issue these APE shares, which started in the form of a dividend, the stock. So if we go back almost a month, the stock was at 14.58 a share, and we started to have another kind of meme-ish or meme-like run up to the point by August 12th, we were back up to like 25.46 in the stock, and then right after they announced this APE share thing, the stock price just really has fallen off. I mean, look at it over the past month. Had a little bit of a run up, and then it's just fallen off. And especially Monday, like the reaction to it Monday was horrible. I mean, the stock completely tanked. Look at that, 18. It lost like over $6. 18.01, and it closed out that Friday. By close of business Monday, 11.52. That's uh that's a big drop. And then it's really kept dropping further. And I don't know if I would even touch this. Like this could have another meme-ish run up again. It probably will, based on the way it's done. But I would go with like when I buy stocks, I go with more stable, large cap companies that have been around a while that have kind of solid business models that I really don't think are going to go anywhere. I mean, I do gamble on small cap stocks. I did that with Smile Direct. If you kind of go back and see some of the videos, I actually got out of some of that at a pretty big loss. But that was they had a good concept, I think. Like I said, they had the Invisalign concept, but cheaper. But they really hit a wall, I think, with the pandemic. Even though I thought in a way it could have helped them or that they could have used that to their advantage, but it didn't happen. And small caps are like that, very risky, high revenue, but high cost of revenue that ends up, if they don't manage things right, it ends up eating things up, kind of cannibalizing it. And the business may either fail or never get its footing or never take off like it maybe could. But anyway, so with this, so we went over that other article over here about why they did it. And I'm not going to go through the whole thing, but then I pulled up a Bloomberg article here. AMC goes ape. What's this? Also, Musk versus Mudge versus Twitter. We'll stay away from that. That's another story. What's this? Ape. My basic meme stock corporate finance advice is that if you are a public company, people want to pay a lot of money for your stock for no real reason. You should sell it to them. This is funny. If your stock is overpriced, you should sell it. This is good for your existing shareholders. Well, yeah, that's true because you're selling shares for more than they're worth, which is accretive. Word of the day, accretive. Wow, as good as my vocabulary is, I don't know if I've ever heard that word. I think I gotta go look that up. I'll do it now. Word of the day on the channel, accretive, characterized by gradual growth or increase. Nice. I'm gonna start using that. So anyway, so word of the day there on the channel. That's a first for the channel. Usually it should be like a stock tip of the day, but instead it's a word of the day. And AMC is not the stock. This is, well, the stock tip of the day, I guess, not advice, but AMC I would stay away from, right? Okay, so it's bad for people buying shares from you because they're overpaying, but on the other hand, they were going to buy the shares anyway from someone else on the stock exchange, so they might as well buy them from you instead. So he kind of went kind of full nerding out there. While this feels right as a basic thing, is there any? This is like an academic article here. Let's see. AMC is a huge meme stock, has over the last couple of years been particularly aggressive about selling stock into its meme rally. In June 2020, they had about 104 million shares of stock outstanding. Now it has about 516 million. Wow. Roughly 80% of all AMC shares were issued in the last 2 years, partly out of late 2020 desperation. Pandemic is bad for movie theaters, but partly out of early 2021 opportunism. A meme stock rally is great for movie theaters, I guess. There is, however, a weird complication limiting how much AMC can do. Public company certificate. We're not going to go through all that. Wow, he's got like the exact number of shares here. This is a good article. It's issued 500, almost 517 million, leaving about 7.4 million to spare. Is there anything like that we can? Let's see. I'm not going to go through all of this. I mean, this is a good read. But wow, this is a lot of information here. Anyway, honestly, I think this is kind of a this whole thing with the ape shares and all that. It's silly. Some people call it a scam. I don't know if I'd go that far. I mean, AMC, they're a legitimate company and stuff, but I think I would avoid this company. If you want to check this article out on your own time, here it is, Bloomberg from August 23rd. And with that, again, AMC goes ape, and I don't think we should follow. So thanks for watching. Like, comment, and subscribe, and keep an eye out for my next videos. I think the next one I want to do is on, oh, Tattooed Chef had a little bit of a rally. There's like 2 or 3 topics I want to get into, but that should be the next one. So keep an eye out for that. Thanks so much for watching. Take care. Have a good night.